Well, despite the appreciation recorded so far in the Naira trade versus the dollar, we can see domestic prices in the past week have moved higher. It's interesting to note that the prices of agri-commodities such as beans, rice, gari have gone up again. Now, the price of cement has also gone up by as much as 17.3%. That's according to the report by research team of the Financial Derivatives Company. Now, Amaka Ajebu, one of the research analysts at FDC, is here to tell us what is driving these prices at this time and all of the burning economic issues. Good morning, Amaka. Thank you very much for joining us.
Thank you for having me.
Now, what is your analysis of commodity prices so far? Why are we seeing an increase on prices of major staple food like beans at this time?
Yes, okay, so first of all, we should note that these commodities are in the food basket, and the food basket is relatively less sensitive to forex movements than the non-food basket. So let's get that aside. And then second of all, I also want to stress that our predictions for inflation in April are to remain as they are because these aberrational movements in prices started to gain traction in the month of May. So now let's move on to the commodities. So beans, the price of beans has moved up, the price of gari has moved up, and this is due to aberrational factors because our analysts in the markets, we spoke to them, and particularly for beans, they brought up the fact that there was a security scare in the north, so that kind of puts a damper on supply to the south. So, but they expect that as the week goes by, as we move into the next week, this supply distortion should ease up. And for gari as well, they also recorded scarcity in gari, but they are optimistic that this aberrational price movement should ease out as we move into the next week.
Now, did he tell you exactly when we should begin to see supply of these commodities? You did mention beans to the southwest.
Yes. So he did mention that as we enter the next week, we should see the prices revert back to how they were.
From your report, you keep indicating that prices of commodities, domestic commodity products, have remained sticky
down.
Your terminology and all that. So why is it so?
Yes. So when prices are sticky downwards, it means that they're finding a resistance at a particular level and they have refused to come down further. And you would expect that, with the CBN pumping in forex into the market, that everything should go according to normal and then
but
price
it's not happening.
But it's not happening. And
why is it so?
Yes, so this is attributable to two key factors. So if we recall in 2016, most of these firms were sustaining losses. Some of them, their profit margins were cut dramatically because of, the forex issue. So now that forex, there's been more supply of forex into the market, these suppliers are still waiting to, recover from the hard times that they had to go through, in 2016. So they're keeping prices at the same level until they can recover a significant portion of their losses before prices will come down. And the second and very important fact is that for us to see prices to a downward revision in prices, there has to be significant output growth in the economy. So yes, we are seeing slight improvements in the PMI, slight improvements in inflation, slight improvements in production, and all these fundamentals. Yes, that's very good. But then we need an accelerated increase and an accelerated improvement in these key fundamentals. So the reason why we haven't seen this yet is because we need an increase in capital expenditure. We also need more sustainability in the FX market because as we see now, yes, supply has increased, but the market is still fundamentally inefficient. According to a report I was reading, banks are selling within a range of 350 to 425 naira. So that spread is still dramatic. So you need the market to be efficient so that forces of demand and forces of supply are the ones determining the price, and movement of forex in the market are not, someone pinpointing, okay, what I'm going to supply and what price I'm going to charge. And finally, also, there's the new wave of Naira liquidity in the market. So you call up your bank, I need to raise an LC, I need this amount of Naira, to be forwarded to that account so I can get my dollars. But there are no dollars, there's no Naira, sorry. So, and then you have high interest rates in the market. So that problem has become the new fad right now. So with those factors, output growth is still capped at a certain point. So when these factors start to ease out, that's when we see output growing at a much accelerated pace.
Now, you did mention increase in capital expenditure, and we are yet to see the 2017 budget.
Yes.
Now, what's the likely implication of this delayed budget on domestic commodities market?
Yes, okay, so the impact you would say is, the impact through the inability of, okay, so the budget has not been passed, so they can't issue out contracts. And without those issuing of contracts, you can't employ people. And without employment, you don't have money to spend. And without money to spend, aggregate demand is still capped at a certain point. So that is where you start to see the impact on domestic prices. But the major impact we see is that if you look back in 2016, one of our problems, most people, if you ask them why did we sink further into the recession than was anticipated, they will say it's because, the budget policy delay and budget delay. And it's like we haven't learnt from 2016. This is 2017, 5 months in, and you have not issued the budget for 2017. So it doesn't say so much about the fiscal side. So the government needs to come together.
Legislature and
have
executive,
to learn. Yes, they have to come together and pass it.
Now, let me take
quickly.
you back to some of those prices you published there.
Yes.
You talked about maize, tomato, and flour remaining constant.
Yes.
And tomato is one of the commodities that come from the north, and we're seeing the price remaining constant.
Yes.
So does it mean that the security alert or challenges didn't affect that commodity as much as it did for beans?
Yeah, so like I said, it was aberrational. So, and it's a temporary effect. So at a certain point, it was time to move beans. But then the scare came up, and then they had to hold off on that supply. But as we go on into this week and the next week, it should recover. But for tomatoes, maize, and flour remaining constant, and frankly, all retail prices remaining constant, is because suppliers are still, first of all, these food items are not forex sensitive, but even for the ones that are forex sensitive, suppliers are still holding on until they can establish, sustainability, because you don't want early celebration only for you to, get your hands tied behind your back. Yes, so.
Right. Now let's look at cement. What is driving the price of cement, and what does a surge in the price of that commodity mean for the market, or signal to the market?
Yeah, so typically cement prices at this period, so in rainy seasons, tend to actually get revised downwards because there's not much building activity because of the impact of the rain on construction. So this has actually confounded us as well. But then a reason why I can say why the price of cement is increasing, first of all, also maybe the manufacturers are trying to recover their losses or recover their profit margins that have been cut, and also a part of the 2016 budget hasn't been spent. So you have till May usually to spend all you need to spend for the budget of the previous year. So maybe there have been issuing of projects and contracts which has spiked up the demand for cement and other construction products.
All right. What's your general outlook for domestic commodities market?
Yes, so we at the FDC think tank still believe that prices are going to remain sticky downwards until manufacturers, suppliers, producers are able to, establish a degree of sustainability in the market. So because they wouldn't want to increase prices for, a shock to the domestic economy to manifest itself, and then they are unable to take prices down again, to take prices up again to match their reality. Yeah.
All right, thank you very much, Amaka. Thank you for your time.
Amaka, thank you for having me.
Ajebu, research analyst with financial derivatives company